This Green Beret's gonna kick your big ass.
I eat Green Berets for breakfast.
Right now, I'm
Very hungry.
Hello everybody and welcome back to the channel, and today's video that is going to focus on Nel stock. It was one of the stock that we covered in our recent video on the top 4 European hydrogen stocks, and as this was the biggest one in terms of revenue, we thought let's have a look at them first. And after having done the analysis on them, we gotta admit this is a pretty interesting company with a lot of interesting plans for the future. They want to grow their business significantly, and they have different ways that they want to achieve this. So this is going to be the first video in a 2-part series. So if you're not subscribed to the channel, please do so you get the notification once the second part come out. So let's jump right into it. The stock is currently trading at 33.76 Norwegian crowns. So again, obviously different from the USD. The stock has been doing tremendously well over the last year, similar to a lot of other hydrogen stocks, and it has grown with around 300% plus minus. The market cap in Norwegian crowns is 47.5 billion, so quite significant. This is not a small hydrogen company as some of the others we covered in yesterday's video. If we take a look at a brief overview of the company, they are what you can consider a pure play hydrogen technology company, and they're listed on the Oslo Stock Exchange. They have, as we will see later in the video, manufacturing facilities in both Norway, Denmark and US, and they have a global sales network. They are, as of today, the world's largest electrolyzer manufacturer, and with a quite significant difference to number 2. And they are also the leading manufacturer of hydrogen fueling stations with plus 110 stations across the world. Again, this is a key area for them that they want to expand in the future. So if we take a look at their main products as of today, they have the hydrogen productions through their electrolyzers. And basically here they take electricity, which can be generated from wind or solar, and they split water into hydrogen and oxygen. So they're basically providing or manufacturing electrolyzers to do that, and they have both alkaline electrolyzers and they also have polymer electrolyte membranes. This is until today the biggest part of their business. Secondly, you obviously have the hydrogen, which you can use in a variety of applications, and the one that Nel is betting on as of today is hydrogen stations, basically where you have dispensers like a gas station and you can come in and fuel your vehicle with hydrogen. So that is a key market that they want to focus on in the future. So as we mentioned before, they have manufacturing facilities across the world. In the US, they're manufacturing the PM electrolyzers, and they have a production capacity just above 50 megawatt per year. The alkaline electrolyzers are manufactured in Notodden and Herøya. I'm not sure I'm saying that correctly. And they have a production capacity as of today on 40 megawatt per year. However, this is the most important part of their growth ambitions. They want to increase the production capacity to 500 megawatt per year, and ultimately they would like to reach 2 gigawatt per year. And what is quite interesting to see here is that this has been manufacturing facilities for more than 90 years. So it's just to illustrate that Nel is not a new company that have just entered the business. They have been around for quite a long time manufacturing these type of alkaline electrolyzers. And again, this just shows that they have quite a lot of experience within this area, and this is one of the reasons why they are one of the leading manufacturers globally. Finally, they have their hydrogen refueling stations that is being manufactured in Denmark, and as of today they have delivered 110, but they actually have a production capacity of 300 hydrogen refueling stations per year. So again, if demand goes up, they don't need to invest in expanding their facilities as of today, simply because they have a manufacturing facility with unused capacity, which is not of course good at the moment, but look at it in the future with the growth that this company have been seeing, it's still quite positive. So what is quite interesting about the capacity expansion at their facility for the alkaline electrolyzers, that is basically that it's fully automated and it's designed according to lean manufacturing and industry principles, which basically means they want to remove all unnecessary waste from the manufacturing perspective and basically optimize the whole production of the alkaline. And again, as we said, they want to increase capacity, and the test production for this, what they call new line, is expected to happen in the middle of this year, and the ramp up will then happen in the following quarter of Q3 2021. So again, they want to significantly increase their capacity, which will mean that they can do things cheaper, they can produce and thereby sell more. So all in all, really good news. So Nel has a relative decent global presence. They have both offices and manufacturing capacities in Scandinavia. They have the same in the eastern part of the US. In the western part, they are both selling electrolyzers and refueling stations. In China, they are primarily focusing on electrolyzers. And in South Korea, they are both focusing on refueling stations and electrolyzers. And as of today, they have more than 20 agents and distributors, and they have more than 30 salespeople. So as we will see later in the video, they are focusing on some of the key markets for the hydrogen sector going forward, namely South Korea and Europe, which, as we've mentioned in some of our other videos, have very aggressive targets for the future. So overall, if you look at the existing hydrogen market, which is 70 million tons a year and around 150 billion US dollars, Nel believes that there is a big opportunity for them, as only 1% of the hydrogen is today made from water electrolysis, which is basically what they're focusing on. And what they're saying is that the large growth potential, which is driven by increasing focus on climate and renewable energy, is decreasing both electricity prices and electrolyzer capex, basically making it cheaper for them to provide hydrogen. And they believe that the electrolysis is set to take a larger share of the overall hydrogen market, and an annual electrolyzer market with a potential of more than 20 billion a year just within the existing hydrogen market alone. So let's put this into perspective. If Nel is right on this, they today have a revenue of around 60 million US dollars, and they basically believe that they will be able to tap in their products to around something around plus 20 billion a year. This is obviously humongous. It may be a bit optimistic, but nonetheless quite significant from where they are today. This is also reflected in the sectors where Nel believe there will be the biggest growth going forward. So they're saying, hey, the industrial applications, which is the traditional hydrogen markets today, there will still be a steady demand for hydrogen. But where the big growth is going to come from is from renewable hydrogen, which is basically what Nel provides through their electrolyzers. And here they use excess power from example solar or wind to transform the water into oxygen and hydrogen that can be used in a various applications and existing and new sectors. And obviously one of them where Nel believes that there will be a huge growth is within their key market, which is the hydrogen production and fueling stations. And what they are seeing today is that, hey, we can definitely use this for smaller vehicles, but we actually see that with the development that is happening at the moment, hydrogen may become relevant for also the heavy duty sector, so basically bigger trucks. This expected growth is definitely supported by governments around the world who in 2020 launched a lot of ambitious growth plans for hydrogen. So we can see here in 2017, Japan were the first one, which is definitely not a surprise given that they are a relatively small country that do not have a lot of room for example, solar farms. And again, you have a company like Toyota who is definitely one of the biggest believer in hydrogen as a fuel to their cars, and they have already launched hydrogen fueled cars. Then you had France in 2018, South Korea in 2019. We have also touched upon them in another video on Bloom Energy, which is one of their key markets. And then in 2020, both the European Union, but also US and Australia, which is not mentioned here, also launched some ambitious hydrogen plans. And as you can see here, Russia, China and Morocco is also in preparations to launch their hydrogen strategies. So basically, since 2010, you can see that hydrogen was at a very, very small scale, kilowatt scale. Now it has grown to megawatt scale in this year, and in 2030 they believe that it will be gigawatt scale, so exponential growth. And this is going to be very interesting to see if the countries or the areas like the European Union are going to live up to the ambitious plans or not. And again, illustrated in a different way, we could look at how the hydrogen demand is expected to grow by 8 times from 2020 until 2050, and by far the biggest share of this increase is related to the transportation sector and industrial heat and power. And what is moving these governments into the hydrogen area and driven the demand is definitely that there's regulations that wants to lower the surplus demand for fuel. They want to do electrification of the transport sector. This is already happening today. We are seeing a shift of going to EVs. There's a lot that wants to move away from, for example, coal to hydrogen for different industries. And all this is going to benefit Nel. One interesting point around the growth is obviously the total hydrogen market will grow 8 times, but Nel has an expectation that the electrolyzers will grow with almost 800 times over the next 30 years. And obviously this may be a bit optimistic, but if only half of it can come true, this will mean massive growth for Nel, and this could be, they are the biggest company in the market as of today, so they have a huge advantage if this is going to happen. So we are quite excited when we see some of these numbers. It may be a bit far out in the future, it may not happen, but at least there are some indications from their side, which is supported by these governments, that could mean that the demand for their products are going to increase significantly over the next decades. And this is also shown when you take a look at the market for electrolyzers as of today. Ranked by revenue, Nel is the biggest, and they are almost more than twice as big as the second company. So again, they are huge within this market, which means that they have certain advantages. One of them is obviously economics of scale. They may also have technologies, they may have patents. So again, they're not a small player, and this is obviously very important to take into consideration when you want to look at the future prospects for the company. And Nel is basically participating from the beginning to the end when they do their electrolyzers. They make tailor-made plant design. We will come into this in a bit more detail later. They are doing the procurement and manufacturing. They're doing the installation at the site, they're doing the commissioning part, and they are also doing the aftermarket part where they need to replace, where they need to change parts, where they need to do service, etc. So they're part of the full value chain, which is obviously good because that means that they have a close connection to their customers. They can build a relationship over time. They're not just there to sell the product and then they are out of there. They're basically needs to be continuously providing a good service, and this basically means that they can establish deep relationship with their customers, which will also be an important ingredient for the future growth. And if we take a look at the electrolyzer development over the years since Nel started, the biggest part of it is definitely capacity growth, scalable growth of the electrolyzers that they're selling. So basically going from kilowatt to multi-megawatt industrial size hydrogen production plants. So similar to what we showed just before on the timeline, what has happened from 2010 to 2020 to 2030, it's a quite similar journey that Nel is on with their products. They basically want to make them bigger, but they obviously also want to make them better. And this is definitely a key component because hydrogen is very expensive today. So again, if they want to match the price of fossil fuels, they definitely need to improve and make the technology for hydrogen even better. And Nel wants to do this by expanding the capacity of the electrolyzers. So here there's an illustration of the need today, the medium term, and what they expect to see in the future for the alkaline business. So today it's small scale, it's 2.2 megawatt per alkaline. In the future they hope to make it between 44 to 60 megawatt, and in the future have plans between 100 megawatt to 2 gigawatt. That's obviously quite far out in the future, but having scale is definitely going to be crucial to be competitive with other alternatives. And this is also reflected here in the graph that shows the maturity level of hydrogen versus solar and wind. Obviously hydrogen has been around for quite some time, but in terms of maturity it is a lot more immature than solar and wind, who is at the moment getting a big grasp on the market. So hydrogen is still on a journey, and this is also translated into that the cost is still higher for hydrogen than solar and wind, which, as you can see here, since 2019 and over the next 10 years have decreased significantly. And hydrogen companies have not been able to deliver on those promises themselves for hydrogen specifically, but they hope that this reduction, for example, in electricity prices can help them to basically reduce the cost and at the same time improve their production facilities to make it commercially more attractive. And again, here they are just comparing their Nel alkaline electrolyzer with the most common form as of today, which is the steam methane reformers. What Nel is saying is that historically and perhaps today, they are more expensive than the steam methane reformers, who is run on natural gas. It has cost around $700 per kilowatt. They believe that by expanding their manufacturing capacity and going to the 500, as we mentioned earlier, they can come down in a closer range to this, and they will basically go below $500 per kilowatt. And if they reach something around 2 gigawatt capacity, which is the long-term ambition on their plan, they will go somewhere just above $300 per kilowatt, and this will be competitive with the steam methane reformers. But it's just again to illustrate that hydrogen is still immature, it is still very expensive, but Nel at least seems to have a plan on how they can make themselves more competitive. So the big goal for Nel is to have fossil fuel parity in 2025, basically 5 years before EIA expects this to happening. And this is an aggressive target. They expect to achieve this by reduction of capex, increase the lifetime of the products, improve the efficiency, increase the current density, lowering the catalyst, and scaling up system components, as we just spoke about. And the ultimate goal is to reach something around $1.5 per kilo. So again, an ambitious target. If they can reach this and can have parity with fossil fuel, again, a lot more companies and sectors will be interested, because obviously most people want to move to more cleaner fuels, but it At the moment today, it comes at a certain price that a lot of them are not willing to pay. So this is crucial if they want to be competitive. And it's very interesting to see that Nel has a target that is 5 years before EIA expect. And this could just be an indication that Nel may be ahead of the competition in terms of driving costs down. And if we take a look at Nel alkaline electrolyzers, they basically have an ambition here as well of reducing the cost to 25% of where it is as of today. And the two primarily areas of this to happening is one, the capacity expansion of the manufacturing facilities, and standardizing the way they do things from an engineering perspective to deliver large-scale offerings instead of small. They want to negotiate with their suppliers to reduce prices or optimize the supply chain in general, and they want to standardize the construction part of their plans. So again, it's not just one thing that needs to be delivered on for this to happen. There are several different elements that needs to happen before this is going to be achievable. But again, what I really like about this is that Nel seems to have a quite good idea on what needs to happen for this to be achievable. They have a plan and they're setting it out. With some of the other hydrogen companies that we have looked at, it seems a bit more vague, but the feeling that I get with Nel, at least as of now, that is they have a clear direction of where they want to go. So again, here we just want to show the standardization of the main alkaline components. Again, we don't want to spend too much time on it, but they basically want to optimize the production of these. Other ways is that they obviously want to improve the efficiency and the capacity of these ones. So here we can see this is how a current 20 megawatt cell stack looks like. So it basically occupies 4 times of what they hope to do in the future of 20 megawatt. And basically the enablers for this is the electrode size and form improvement, increase active electrode area, and increase the current density. So again, this is obviously very interesting because there could be today where some industries or sectors would like to have this, but they simply do not have the space to have all these electrolyzers standing. And by minimizing the footprint of these, again, it may be more attractive for more companies to invest in them. If we move into the polymer electrolyte membranes, it is exactly the same. It is about scale, basically having bigger and better PEM electrolyzers, and they want to have automated ones which can be used as on-site hydrogen generators. So it's all about getting bigger and better in the end of the day. And what we think is pretty cool about Nel is that they basically have a digital application where you can go in and design your own hydrogen plant. You can basically get a clear view of how big is it going to be and a lot of different functions, and you have the opportunity to choose which kind of services you want Nel to deliver. So again, this is really cool. If a company has an idea about maybe we should get a plant like this, they can basically go in and see if it's realistic for them or not. So this is a small cool feature that they're doing as of today. So now we have taken a look at the electrolyzers. Let's go in and check the refueling station. And as we can see here, we have the map and we have the countries where Nel as of today have installed different refueling stations. And a big focus of them is obviously Europe, but also the west part of the US and more specifically California. And if we take a look at the accumulated installed stations that they have had, well, basically over the last 5 years, they have grown with 5 times. And as of today, the focus on them is on smaller vehicles. They want to expand this to larger, bigger trucks, and hopefully in the future they hope that they will be able to deliver to ships and airplanes, but that is a bit further out in time. And again, if we take a look at the hydrogen station worldwide forecast, we basically have 500 in total in 2020. Keep in mind, Nel has around 110, so they approximately have 20% of the total market. And in 2030, they expect to be 11,000. Nel has a lot of unused capacity, so as of today they don't need to increase significantly their capacity. They don't need to put a lot of money into building their manufacturing capacity, and that's really good news. And just imagine if Nel can keep around 20% of the market. It basically means that they will have around 2,200 refueling stations in 2030. That is quite significant growth, and maybe if their refueling stations are better than their competitors, maybe this will grow even more. So there is definitely opportunities to grow their business in the future. And similar, we're not going to spend too much time, but similar to the electrolyzers, Nel is also involved in the whole process here, from product development all the way to installation and commissioning, and also the service afterwards. So they're not just selling the product, they are also going to have revenue from servicing the stations afterwards. And again, it's about getting that close connection with their final customer, which could lead to more sales. So again, we like the strategy that Nel is also applying to their fueling stations. And basically they have two main competitors as of today. One of them is obviously diesel, and here they hope that by 2025 they can have parity with the diesel prices. So again, very ambitious when we see where they are as of today, and we're not 100% sure whether Nel can deliver on this. But even though if it happens a few years after, it would still be quite good if they could have the same price as diesel today. And finally, and perhaps more interesting, obviously there is a fight between hydrogen and battery. At the moment, it seems like the battery is doing better than the hydrogen part. We have Tesla, we have a lot of other EV manufacturers who are betting on battery technology, while as it seems like as of today that it's primarily Toyota who is focusing on the hydrogen part. But what is going to be interesting is whether the battery can maintain their lead and perhaps competitive advantages that they have today. Right now we will move in to see what are some of the pros and cons of the hydrogen technology. So one of the advantages that hydrogen has as of today is that it is basically much quicker to charge or refuel the car than it is to charge an EV car. It goes a lot faster, and at the same time the grid is much less dependent when you refuel the car with hydrogen than what it is if you had to do it with an EV car as of today. And this is both the case obviously for smaller vehicles, but also for big, larger trucks. This does not mean that this is going to be the similar situation in the future. Both technologies are in constant involvement. Hydrogen is becoming faster to refuel. EVs are becoming faster to charge, and obviously can also run larger on the miles than what it could just a few years ago. So again, there's no clear indication that hydrogen will have an advantage in the future, and if it doesn't have, that will obviously be a bit of a blow to a company like Nel, who is investing heavily into the fuel part of the hydrogen sector. But as of today, just to illustrate it, what Nel is saying is, if you look at just in New York, where you have a lot of taxis, if you're going to meet the requirement for all these taxis, if you only had batteries, you will need to have 180 NBA cards, while as for hydrogen, you would only need 12. And again, area in New York is scarce, it's very expensive. So it's an indication of, as of today, it may be commercially better to invest in hydrogen for urban areas where there's not a lot of space or room to have stations, while as if you want to have charging stations, it will require a lot more space. So besides obviously the cost of hydrogen, the advantage of having faster fuel transfer is critical when comparing with, for example, EV and batteries. And we just wanted to illustrate how things have developed over time. So as of today, you have 5 kilos that you can do per 5 minutes that exist in the market. The same with 20 kilos for 10 minutes. This is for a little bit buses. Then for larger trucks, it is still in progress, 50 kilos for 10 minutes. And for really heavy trucks, 100 kilos for 10 minutes does not exist yet. And this is what some of the companies are trying to reach. And if we just take an illustration of how Nel has developed over the last 15 plus years, you can see that the first Nel fueling station in Denmark in 2004 had 10 kilos a day, and they could transfer 0.02 kilos per minute. So really slow. Then here, 4 years after, you basically had 50 kilos a day and 0.5 kilo in minute. So obviously quite significant improvement. This was also a fueling station in Denmark. Then you have in 2018 in California, Northern California, where they had the first 14 stations. They went to 200 kilos a day that they could transfer, and they could do 1 kilo per minute. So again, significant improvement. And here 2 years later, they have a hydrogen refueling station under construction also in California, which will have 1,000 kilo a day, and they will be able to do 2 kilos per minute. So basically twice as good on the time than what it was just 2 years ago. So it's just to illustrate that this technology is not standing still. They're continuously trying to improve, making it bigger and faster and better. And this is illustrated from a different angle, where we see the technology development for Nel over the last plus 12 years and they want to be in the future. So having higher capacity, they want to be able to do things faster, they want to be able to do things cheaper, and they want to improve the technology. And here it's very important to know that they have 20 patents acquired for development of core fueling technologies, which obviously should also be an advantage compared to some of their competitors. And if we take a look at the patent focus that Nel has had, cost reduction and reliability is in focus, and it's divided into what they call 3 technology platforms. They have fueling station, they have fueling protocol, they have compressor, they have what they call ELI system and ELI stack. So again, it's very important that if they have developed something good that is better than their competitors, that they get patent on it, so the technologies cannot be replicated by their competitors without consequences. This is all we had for today in this part 1 video of Nel. In the part 2, we're going to focus a bit more on the financial side. We're going to look into a bit more details in their growth in terms of organization. We're going to look at some of the key agreements that they have made, especially in the last quarter, which is quite exciting and which give some promise indications for the future for Nel. We are definitely quite excited about them as of today. We think that this could be one of the more solid hydrogen stocks to choose. So you should definitely subscribe so you get the notification once part 2 comes out. Please also give us a like, because that obviously helps with the algorithm here on YouTube. And please also provide a comment in the comment section. We know sometimes that some of you guys knows a lot more about these companies than what we do, and we are always interested in hearing your perspective and your views on the company. Otherwise than that, there's not much more to say than stay safe, have a nice day, hasta la vista baby.